we had a chance to catch up with K. Krithivasan, MD and CEO at TCS, talking about their earnings and outlook for the company going forward as well. Now, amongst everything else that TCS spoke to us, the key questions to them were around whether growth is coming back and is there visibility there, part one. And part two, has Indian IT been able to make a dent on AI, Gen AI, not from a perspective of just getting numbers going, but whether they have the capability? Listen in.
We don't want to hazard a guess at this time. There is a lot of volatilities. As we keep saying, on one hand, there's a lot of new technology coming in. Our customers do want to invest in those technologies, use them for transformative purposes. At the same time, no one understands the economics, where it is going, and they also want to be ready for a rainy day. So that is making them also pull back on some of the committed expenses, previously committed expenses or investments. So these two things are at play. And there are instances where they also take very, very short-term decisions, right? That's the reason that we are not wanting to call out anything on a immediate term. We've been saying, looking at you talked about the whole year, like whole year, I think we had a strong order book win of upwards of 40 billion. So looking at the sustained order book win and customer conversations, we believe medium to long term, we are quite optimistic and positive. And we kept saying that FY25 would be better than FY24. But difficult to predict on the short term. I don't think it's meaningful.
Can imagine. It's difficult to sit in the chair that you are sitting on for sure. But in the current circumstance. But for the quarter, I mean, the revenue, I wouldn't call it a miss, but for lack of a better argument, let's call it a miss relative to what was estimated and the Bloomberg estimates. Is that because of these reasons that you cited, the macro being what it is and client decision being slow?
Yeah, like when we started the quarter, we were expecting another 50 to 70, 100 basis point more on the revenue side. That's primarily coming from the major markets. We were expecting more growth to come from North America and Europe, which did not happen. But we are able to compensate quite a bit by focusing more on the regional markets as much as we can. So you could see that our diversification playing it off. But that's primarily the reason. Like in US, there are enough uncertainties, like elections are coming up. People don't know which way the elections would go and what would be the policy changes because of the elections. That's also causing an issue.
So when I was looking at macro indicators in the last 1 month, of course, independent of whether rate cuts happen or no, there's some bit of PMI uptick coming in, and one would want to believe that might lead clients to be more confident. But I hear you say that in the US, the election is also as big a factor. What's the sense? You may not be right at the end of it because no one knows, as you said, but what's the sense? Could this economic tailwinds or green shoots result in better spends, or would NA be impacted by these uncertainty around elections until November?
So, see, if you disregard the election for a moment, okay, like you said, and we also been seeing, the fundamentals have been good for not this quarter, like for a couple of quarters. And I feel some people are waiting for a recession to happen, which is not happening. But everyone in the back of the mind think that consumer spending should reduce over a period of time, and which is causing that worry. And but like you said, even in the current quarter, if you look at all the macro indicators, they're all looking positive. So my view is, disregarding the election, there should be an uptick in the medium term. But elections, and the outcome of that could go anywhere, right?
Okay. So your optimism around FY25 results from not what happens in North America or Europe, but the other geographies, because you have said that FY25 will be better.
I know, our optimism comes primarily from our strong order book. Our customers have been willing to sign large deals. Okay, there would be yes, there are pullbacks, there are some old programs that get paused or cancelled, but it's fine. But we believe that considering the size of the order book, okay, it should eventually drive our growth. Maybe not this quarter, maybe, but sooner than later that the growth should come in. And based on the conversations we've been having, see, for a large part, though we talk a lot about macroeconomics on why customers are spending, we believe that whether it's a economy that's up or down, there are enough opportunities for organizations. Like if the customers are focused on conserving or cash, we have to go to them with solutions around cost optimization. And if they are interested in transformation, we'll go to them with more transformation opportunities. So by and large, we have a strong suite of portfolio of offering with which we'll go to the customer. And my optimism comes primarily from our TCV. I don't want to use the macro as the excuse for growth or lack of it.
Okay, fair call. May I play the devil's advocate though, sir? And the question is this, that your TCV, yes, has done remarkably well. I mean, these deals that you won are spectacular, but it's not that was too much under question even in the last 12 months, right? You had an order book which was decent, and yet the numbers relative to what history is shown, recent history is shown, were slightly below. So what is to say that despite this TCV, the growth will be better than FY24?
Yeah, so two things, right? What we see is some of the old programs have been reprioritized. I believe like last 4 quarters, as much of reprioritization has happened, and what is still being executed, I'm assuming these are all the programs that really mark the threshold, and customers want to continue.
Okay.
And so over a period of time, if some programs are not that have to be canned, I'm assuming most of them would have been canned by now. The second factor is how much of the conversion we are seeing from the recently won order book. The conversion from the recently won order book is quite healthy. It is not much less compared to previous years. Like we are seeing the recently won projects, most of them are yielding revenue based on the same historical level. So these two factors coupled with, we believe the growth should return. Like the drag from the old programs getting cancelled should reduce.